Good day friends, CEV group welcomes you for watching this video. Please do not forget to like, comment and subscribe our YouTube channel Registered Values Club for getting all new professional updates. In this video, we will discuss about the regulatory framework for registered values. As you know, today if you have to do valuation for under companies that you have to get yourself registered with the IBBI. So we will discuss about how to get registration with the IBBI and what are the other things which are related with the regulatory framework of IBBI. As of now, you know IBBI is the only authority who is regulating the framework for the values. Before the advent of IBBI, this field of values was unregulated. Now, with the IBBI coming into the pictures, it has changed the whole scenario. So, it is under Ministry of Corporate Affairs. So, we will discuss it in details how to get registered with the IBBI, and then after getting registration with IBBI, how you can work as a registered valuer and what are the things you have to take care of as a registered values after becoming a registered valuer with IBBI. So, regulatory framework for registered valuers in India, as you know, the valuer profession in India has undergone significant transformation with the implementation of a comprehensive regulatory framework. This framework serves to standardize practices, ensure ethical conduct, and establish professional credibility in the field of valuation. As companies face increasingly complex financial decisions, the role of registered values has become crucial or critical in providing fair, transparent, and reliable asset valuation. So this presentation explores the evolving policies and governance mechanism that shapes the important profession of India's economic landscape, that is valuers profession. So introductions to values in India. As far as IBPI is concerned, it has divided the assets into three categories. So it provides objective assessment of asset value for financial reporting, transactions, taxation, and regulatory compliances. And the three categories which are given by the IBBI under which the valuers are registered. First one is for property valuation category, second is business valuation category, and third one is plant and machinery or equipment valuation category. As far as the legal framework for the value is concerned, it operates under structured regulatory environment with the clear standards and guidelines. So these three things are important from registered values point of view. First one is Companies Act 2013. Then these things are oversight by the IBBI, and the valuers are registered under Registered Values Rules 2017. So we will discuss in detail all these things in the coming slides. As far as work of value is concerned, so you know the valuation is to be done under certain standards or professional standards. So what IBBI has mandated that you have to maintain integrity of valuation process, and it has to be done through standard methodology for ethical, for consistent and transparent reporting. So for ethical guidance, consistent approaches and transparent reporting, some certain professional standards are to be followed. Registered valuers play a pivotal role in India's economic activity by providing credible opinions on asset value. The work supports critical business decisions, including mergers and acquisitions, financial reporting, taxation, and insolvency proceedings. The integrity of these valuations directly impact investors' confidence and market stability. So basically, when you are doing valuation as far as registered values under IBBI, your main work is to have to do valuation in case of mergers and acquisitions, for financial reporting, for taxation, and mainly for insolvency proceedings as a registered value, which is your duty to work. So only persons who are registered under IBBA they can work, especially in case of insolvency proceeding. The valuation work can only be done by a registered value. So legal foundation, we will now discuss about the Companies Act 2013, and under this act, the main section which is related with the value is section 247. So we will discuss about certain basics of the section 240. The Companies Act 2013 it was introduced, and in this the special section which is for registered value is section 247, which for the first time established statutory recognition for the valuation profession in India. This section mandated that specific valuations must be conducted only by the registered value, especially those valuations which are to be done by registered values for insolvency proceeding, especially these are to be done by the registered value only. And for that, IBBI has been given powers for registration of values, and the Act designated the Insolvency and Bankruptcy Board of India (IBBI) as the competent authority to regulate registered values. This granted IBBI the authority to establish standards, monitor compliance, and enforce regulations. So, what are the things which this IBBI has to do? They have to establish standards for the valuations, and then they have to monitor the compliances to be done by the registered values, and they have to enforce regulations from time to time. And the Act also maintained that valuation by registered values mandatory for all listed companies and for specific transactions like share issuance, companies, arrangements, and during insolvency proceedings. So under these conditions, all the valuations are to be done only by the registered values who are registered with IBBI. So the section 247 marked a paradigm shift in India's approach to valuation, moving from an unregulated practice to a formalized profession with legal backing. This transformation aimed to enhance transparency, reduce valuation disputes, and protect stakeholders' interest in the corporate transactions. So now we will discuss basics of IBBI, the regulatory authority IBBI. So it is the apex authority. Its aim is to ultimate regulatory oversight for all registered values. Its aim it will establish rules and standards for the registered values, for development of valuation standards and guidelines, and how it regulates the profession of registered valuers. It first it process and approve the registered values application, and after he becomes registered value, it's what it do. IBBI monitor the registered values and RVO's activities, and It is the authority which enforces disciplinary actions against non-compliances by the registered value. So the Insolvency and Bankruptcy Board of India serves as a cornerstone for valuation regulatory framework established under the Insolvency and Bankruptcy Board 2016. IBBI mandate was expanded to include oversight of registered values, recognizing the critical role of fair valuation in insolvency proceedings. So IBBI maintains a registry of qualified values, conducts examination, recognizes valuer organizations which are called RVO, registered valuers organizations, and investigate professional misconduct. The comprehensive approach ensures that values maintain a high standard of professional conduct and technical compromise. So everything related with the registration of values is to be dealt by the IBBI. That is section 247. So what are the registered values rules 2017? So on October 18, 2017, Ministry of Corporate Affairs notified the company's registered values and valuation rules, providing the comprehensive framework for registration and regulation of valuer profession. So for the registration, rules were outlined regarding the eligibility criteria, including qualification, experience, and successful completion of valuation examination. So, educational guidelines and training pathways for aspiring valuers, including courses from recognized institution, was given under educational guidelines under these rules. And then a disciplinary mechanism was introduced to create a structured process for monitoring values conduct, investigating complaints against them, and imposing penalties for violations done by them. So the Registered Values Rules 2017 represented a watershed moment in the India's valuation profession. Prior to these rules, valuation was an unregulated activity with inconsistent standards and practices. The rules established a unified regulatory framework that prioritized professionalism, competence, and ethical conduct. So, first we will discuss about the values organization, how they are established, what are their basic requirements, and or what are the things which are to be done by the RVO. We will discuss about them. First, we will discuss about the eligibility criteria for the RVO. So, RVO it is a Section 8 company or a professional institute. So, its minimum net worth should be more than 10 lakh and it should be a non-profit organization. It should have non-profit structure and it should have at least 300 members who may qualify as a registered valuer. Then what are the key functions of RVOs? Its key functions are enrollment of our valuer members, give trainings to them, and conduct educational program so that they are preparing RV for valuation examination. Then after they become the registered valuers, then they have to monitor their professional conduct and they have to handle the grievances and disciplinary mechanism. So, what governance requirement from RVO is required? They should have a transparent governing structures. They should have code of conduct for the members that they have to regularly report to the IBBI and they have to have a fair disciplinary mechanism and of course they have to develop technical standards for valuation. So recognize value organizations form the middle tier of the three-tiered regulatory structure of registered valuers in India. They act as frontline regulators under IBBI supervision, serving as both professional membership bodies and regulatory monitors for their members. Currently, there are numerous IBBI recognized RVO, including CEV IAF RVO, operating across different asset classes, creating a robust framework of professional development and regulation of valuation profession. So categories of value as of now there are three categories of values: land and building, plant and machinery, and security and financial assets. So land and building, it specializes in valuation of real estate assets, including residential, commercial, and industrial properties. And the minimum qualification for a person to become a registered valuer under land and building category is engineering in civil, architects, or town planning, and he should have an experience in the relevant field. Or if he is a postgraduate in any of the above courses, he should have a minimum of 3 years of experience. So it focus on location analysis, construction cost, and market comparables. The valuation done by these registered values under land and building, they focus on location analysis, construction cost, and basically market comparables. Generally, these are the work which are to be done by the land and building values. Second category under this category of values of IBBI is plant and machinery. So it focuses on this category focuses on valuation of industrial assets, equipment, and infrastructure component. And for a person to become a valuer under this category, he should be a graduate in either in mechanical, electrical, and electronics and communication, or electronics and instrumentation, or in production engineering, chemical engineering, textile engineering, leather, metallurgy, or aeronautical engineering, or graduate in valuation of plant and machinery or equivalent. So these are the minimum qualification. Or he may be a fresh postgraduate in any of the above courses, but the difference is that if he is graduate, then he has to have an experience of 5 years in the industrial assets, and if he is a fresh graduate, then he has to have a experience of 3 years in the relevant field. So the persons of plant and machinery, they are expertise. They are having expertise in depreciation, replacement cost, and functional utility of industrial assets. And third categories under the IBBA registered values is security and financial assets. So they persons who are registered under this category are specialized in valuation of business, financial instruments, and intangible assets. And for a person to become a registered valuer under this category, he should be a member of institution of Chartered Accountants of India, or member of Institute of Company Secretaries of India, or a member of Institute of Cost and Works Accounts of India, or he may be a Master of Business Administration or postgraduate diploma in business management with specialization in finance. And he should have an experience of 3 years in financial analysis. So the persons who are registered under this category, they are having specialization in discount cash flow methods, comparable analysis, and financial modeling. So the categorization of registered values into these specialized asset classes ensure that valuations are conducted by professionals with domain-specific expertise and understanding. Each category has its own methodology, standards, and approaches tailored to the unique characteristics of the asset being valued. So that how the values are registered, the registration process is first thing is the person who wants to register under any three category should have a minimum educational qualification and minimum professional experience. And then the RV's duty is to verify the experience. Then the person who want to get registered, he will register with himself within RVO, and then he will go through a 50-hour valuation course conducted by the RVO, either offline or online. And then he have to have some practical training before, but this is not essential, but he must have for experience for appearing in the examination, so that the things which he has learned during the 50-hour valuation course, he is able to understand these things, so that he is able to appear in a valuation examination conducted by the IBBI. Then he has to pass this examination with minimum 60% marks. This is a 100 marks paper, out of which you have to get at least 60% marks, and there is a negative marking of 0.25 marks for each question. It means if it is a 1 mark question, you will be deducted 1.25 if the answer is wrong, and if it is a 2 marks question, then it will be 2.5 marks will be deducted from your result. So you will have to appear in a valuation examination for the asset class, and of course a person can have become a valuer in any one of them or any two of them, or if he has the requisite qualification in all the three classes, he may become the valuer in all the three classes. Depending upon that, he will have to appear in the 50 hours training in all the class on the all the categories. Then he has to pass the valuation examination of that category, and then he may become a registered valuer in that category. So registration, after passing the examination, he will apply to the IBBI through the RVO of which he is a member, and after verification of all the details submitted by him to the RVO and IBBI, a certificate will be issued. Then he will become a registered valuer, and after he becomes a registered valuer, then he have to get a certificate of practice by attending the requisite course, or for becoming a for getting certificate of practice. So the registration process is designed to ensure that only qualified professionals with appropriate knowledge, skills, and ethical standards enter the valuation process. The multi-stage process involves both educational components and various rigorous examination to test conceptual understanding and practical application skills. Once registered values must renew their registration every 3 years, demonstrating continuous professional development and maintaining good standing with RVO and IBBA. The code of conduct for registered values for maintaining honesty, fairness, and professional skepticism. The code of conduct is maintained by the registered valuer organization. They have their own code of conduct for maintaining honesty, fairness, and professional skepticism of the valuers, and it is an important that the valuer should work as an independence without any influence. So avoiding conflicts of interest and external influences, so that the registered value work as an independence, independent value without any external influence and conflict of interest. And he should maintain a professional competence by maintaining knowledge and skill at all required levels. And the thing is, he should maintain confidentiality of the work he has done so as to protect clients' information and property data he has got for doing valuation. So the code of conduct serve as a ethical foundation for the valuation profession in India. It established the fundamental principles that guide registered values in their professional activities and the relationship with the clients, regulators, and public. Adherence to these principles is mandatory and violations can lead to disciplinary action. Listed values must maintain transparency by disclosing all the material matters that might affect their independence, disclose limitations of valuation, and communicate clearly for the basis of their conclusion. The ethical framework enhances the credibility and trustworthiness of valuations conducted by the registered professionals. Then valuation standards. So first is IBBI valuation standards. So comprehensive guidelines covering general principles, approaches, and specific asset class methodologies. These will serve as a primary reference for all the registered values in India. So the IBBI is in the process of establishing IBBI standards, and until then, the international valuation standards or other globally recognized framework has to be used by the value registered values for doing valuations, and they are also important for facilitating cross-border transactions and investment. So the thing is that all the standards that are designed, they should fulfill the requirement under the Companies Act, Income Tax Act, CEV regulations, and Insolvency and Bankruptcy Code, ensuring valuations meets to three regulations. So standards address emerging valuation challenges including ESG factors, intellectual property valuations, and distressed asset valuations, keeping Indian practice current with the global development. So now you know these days it is not only the valuation of all only the three category on which the valuers are registered, but mainly the new emerging valuation challenges are also there. So the standard you are following, you must address ESG factors, intellectual property valuations, and distressed asset valuation so that they are in uh, with the global developments and having Indian practice with global developments. So standardization of valuation practices ensures consistency, reliability, and comparability across valuations performed by different professionals. These standards provide a common language and framework that enhance transparency and reduce subjectivity of the valuation process. So, what is the role of registered values in insolvency cases? First role is identification of the asset. So, comprehensive identification and creating at all data assets which are to be valued under insolvency proceedings. Then he has to prepare a fair valuation. So his aim is to determine liquidation and going concern value and gives a fair valuation in any case. And then he has to take care of all the stakeholders. He has to consult all the stakeholders and explaining them the valuation to the characters and to the tribunals. And he has to prepare the reports, detailed documentation reports, supporting valuation conclusions. So these are the basic role of registered valuers, especially in case of insolvency cases. So the Insolvency and Bankruptcy Code 2016 mandates the appointment of a registered values to determine the fair value and liquidation value. So basically these two things are to be found out by the valuer. First is fair value and second thing is to find out liquidation value of the assets of corporate debtors undergoing insolvency resolution. These valuations are critical in establishing the baseline for resolution plans and ensuring fair treatment of all stakeholders. Registered valuers must navigate complex scenario involving distressed assets, limited information and compressed timelines while maintaining independence from the influence of creditors, debtors and regulation professionals. So the objective assessment is fundamental to the integrity of the insolvency and bankruptcy resolution process. So now we will discuss about the challenges which faced by registered values. Even after getting registration with IBBI, registered values have to face many challenges. First thing is about educational gap. Educational gap means practical experience. So despite structured training programs, many values struggle with practical application of theoretical concepts. Because the rapidly evolving nature of asset classes, particularly in technology and intangibles, many things are being added each and every day. So these requires continuous learning beyond formal qualification. But because of limited specialized institutions and lack of practical training for the registered values, and because of emerging asset class, the knowledge gap exists, which we have to uh, get rid of. And then the second thing is when the valuer is doing valuation, he have to maintain objectivity amidst client pressure, and it remains a challenging job for him. So valuers often face explicit or implicit expectations to arrive at a predetermined value that favor specific stakeholders. So he has to save himself from the client pressure for favorable values. He have because his work is fee dependence that is affecting his the objectivity, and he has to pass through or navigate through the conflict of interest. And the main thing which he has to do is to complete the regulatory compliance. So the dynamic regulatory landscape creates compliances challenges. Values must adapt to the evolving standards, reporting requirements, and methodological approaches prescribed by multiple authorities. So first thing is because he has to maintain and pass through the regulatory landscape. For frequent regulatory changes, he has to give multiple overlapping authorities, deal with the multiple overlapping authorities, and he has to pass through the documentation burden. He has to submit a certain documents after certain period of time, and its burden lies on him. So these are the certain challenges which are faced by the registered values even after getting registered with the IBBI. So addressing these challenges requires a multi-pronged approach involving educational institutions, regulatory bodies, and industry associations. Collaborative efforts to enhance training programs, strengthen independence safeguard, and streamline regulations will be essential for the continued development of valuation profession in India. So next is disciplinary mechanism for registered value. So if a stakeholder think that he is not satisfied with the work done by the registered valuer, or he think that the registered valuer has done something wrong which has affected the process, he may file complaints against the registered value either to the RVO, or he can directly complain to IBBI for alleged misconduct or professional negligence. Complaints must specify violations with supporting documents and evidence. So first he has to file. First the stakeholder has to file the complaint against the RV's misconduct or professional negligence to either IBBI or directly to the RVO. So, when the complaint is received, then initial assessment is done by the disciplinary committee, and it determines if the prima facie any case exists, and those cases without any merit are dismissed, and while the valid complaints are processed further for investigation. The investigation is done by the through by the RVO or IBBI, either through document review, or it may be through interviews or through expert consultations, and valuer is given opportunity to present and defend the case against the alleged allegations. So if it is found that he has done anything wrong, then the disciplinary action may be taken against him based upon the investigation findings. So penalties may range from warning to monetary fines. It may be that he is suspended for certain period of time or for lifetime, or that it may be that registration is permanently cancelled depending upon the severity of the violation. So, but there is a appeal process also available, and if the aggrieved value think that his case has not been properly listened, then he may appeal against the decisions to the appellate authority with a specified time frame for review of the decisions and possible reconsideration. So the disciplinary mechanism ensures accountability and maintain public trust in the valuation profession. By establishing clear procedures for addressing misconduct, the regulatory framework balances due process rights of the values with the need to uphold professional standards and protect stakeholders' interests also. Then, internal comparison of valuation regulations of different countries. In United States, regulatory mode is self-regulatory, and its key features are appraisal foundation sets standards and state level licensing is there in USA, and the India may learn from these things the robust continuing education models and specialized certifications which are given in US. And in United Kingdom, there is a professional body which oversight all the process, so especially risks. It dominates the valuation profession in UK, and the Red Book standards, which present strong ethical framework, are followed there, and from it we can learn professional indemnity insurance requirements, quality monitoring, etc. And in Australia there is a mixed model, and there are certain professional bodies with the government recognitions. They are taking care of the valuation professions, and they have national standards there. So we can learn from their public-private partnership approach and industry consultation. And in Singapore, there is two, three regulations available there. There is centralized oversight, mandatory registration of values there, and international standards are adopted there. So we can learn from them the efficiency in the registration process and global standard alignments to arrange, include in our valuation standards. So global valuation regulatory frameworks offer valuable insights for India's evolving system. The most effective models blend rigorous professional standards with practical flexibility to accommodate market reality. India's current framework incorporates elements from multiple international models, creating a hybrid approach with statutory backing. Moving forward, India can benefit from adopting best practices in continuing professional development, quality assurance mechanism, and international standard harmonization with maintaining its unique three-tier regulatory structure. So, importance of continuous educational professional development. As on date in India, IBBI registered valuers are required to complete a minimum of 10 continuing educational program credit hours each financial years and 64 credit hours in a 4 years rolling back. The CEP credit hours are calculated from the date of registration of with the IBBI. So, but these are applicable up to 31st March 2025, and after that, those who are registered, though, after that they have to attain at least 16 CEP points every year. The first this 16 hours CEP has to be done by all the registered values. Only special concession was given during the COVID time that you can carry over the points for the next years, so that in the 4 years you are having a total of 64 points. But now, as of now, you have to at least 16 credit points every year. So the continuous professional development stands at a cornerstone of the registered values regulatory framework in a rapidly evolving business environment with changing regulations, emerging asset valuations, and new valuation methodologies. Ongoing education ensures values maintain competence and relevance. And you know that new and things are emerging every year, every day in the all the asset classes, and new valuation methodologies are also being introduced so as to make them relevant as on date. The listed values have to uh, pass have to have some continuous professional development every year. So he has to go attend at least 16 hours of continuous educational programs in a year. So now you know in these days, technology is being introduced in valuation profession also. So what are the impact of these technologies on valuation? First thing is artificial intelligence. So IE algorithms are revolutionizing preliminary valuations by analyzing vast data sets of comparable transactions. Machine learning models can identify patterns and factors affecting values that might not be immediately obvious to the human values. So there are many models in the AI, automatic valuation models, pattern recognition in market data, predictive analytics for future values, and AI is helping in these fields. And then the next thing is blockchain technology. So distributed ledger technology is enhancing transparency and verifiability in the asset ownership and transaction history. So the AI is helping for the overall valuation technology, but the blockchain technology is important in enhancing transparency and verifiability in asset ownership and transaction history. Smart contracts are streamlining transaction processes while maintaining immutable records. So it is blockchain technology helping immutable transaction records, transparent ownership history, and it reduces information asymmetry. And the third thing is the new technologies can help in data analysis. Advanced analytics tools are available and they enable valuers to process and interpret massive data sets quickly. Real-time market information and demographic data provide deeper insight into the value driven drivers and trends. So These are the fields such as big data integration, geographic information systems, and market trend visualizations. So these have the values and in many ways, and this technology has impacted valuation in many ways. So while technology is transforming valuation practices. The regulatory framework is still adapting to these innovations. IBBI and RVOs are developing guidelines for technology used in valuation, balancing innovation with the need for human judgment, professional skepticism, and ethical oversight in valuation process. So compliance and reporting standards. So what are the compliance and reporting standards as far as registered values are concerned? So scope of and definition of this uh, reporting standard is it clearly outlines the valuation purpose, asset description and limitations. So when you are doing valuation as a registered values, what you have to do? You have to clearly outline the valuation purpose. This is the first thing which you have to give in your valuation report. Then you have give the proper description of the assets you are doing valuation of, and then you have to present what are the limitations of using your valuation report. So next thing you have to give in your valuation report is which appropriate valuation approach you have used for arriving at your value, and with rational supporting rational to prove that why you have used this method or this methodology for calculating the valuation of that asset. And then you have to present comprehensive data based on which you have arrived at your valuation. You have to give the calculation, all the calculations you have made for arriving at your value, and you have to give the assumptions which you have used for arriving at that particular value. So analysis documentation has to be attached with your valuation report. And in the end, you have to give your conclusion formulation, your final opinion with certification and compliance statement. So valuation reports serve as a primary deliverable of registered values and must adhere to strict compliances and standards. The IBBI and RVs have established detailed guidelines for report content, structure and disclosure to ensure transparency, completeness and reliability. A compliant valuation report must clearly document the purpose of valuation, the relevant dates, methodologies applied, significant assumptions, limitations, data sources, and conclusion. So it must include appropriate caveats and disclaimers, the values registration details, and declaration regarding independence and compliances with the valuation standard. So this is how you have to present your valuation report as a registered value when you are doing valuation under companies. And then what is the future of valuation profession in India? So first thing is there are many new emerging asset classes which are new to the values. Now they are interrelated with the existing classes, but you have to have certain knowledge to do valuation under this category. First is cryptocurrency and global assets, then intellectual properties and intangibles, then credit, carbon credit and ESG assets, in agricultural land and water rights. These are the certain categories which are still to be added in the IBBI, but they are interrelated with the existing categories. Then there is need for regulatory expansions, so it should be applied to the private company transactions also. So new specialized value categories are to be added. Then harmonization with tax valuation requirement is are needed in the existing structure. Then the most important thing is enhanced cross-border valuation guidelines which are not present as of now. And then there are certain other professional opportunities available in the field of valuation which are related, though they may not be exactly the valuation field, but they are related with the valuation profession, such as forensic valuation services, litigation support and expert testimony, advisory roles in emerging industries, and then specialization in sustainable valuation. These are the certain fields which in which the values can have their work in the coming days. So the valuation profession in India stands at the cusp of significant growth and transformation. As the economy continues to evolve, the demand for specialized valuation expertise will increase across all the sectors. The regulatory framework is expected to expand its scope to cover the more transaction types and asset classes, creating new opportunities for registered values. India's position in global economy will also drive greater alignment of valuation practices with international standards, potentially opening doors for Indian values in international markets. The profession of future looks promising with enhanced recognition, expanding scopes, and increasing integration with the global process practices. Then, in short, we will discuss some case studies on valuation practices. So, illustrative case studies demonstrate how registered values navigate complex valuation challenges in real-world scenarios. In a recent high-profile insolvency case, values employed multiple methodologies to, a, to assess the distressed manufacturing enterprise, balancing liquidation value against the going concern consideration to maximize credit recovery. So, in another notable case involved in the valuation of a technology startup with significant intellectual property but limited revenue history, registered values developed innovative approaches combining traditional DCF methods with comparable transaction analysis and real options valuations to arrive at a defensible conclusion. So these things are being done by the value registered values these days. Then conclusions and call to actions. So what is to be done? That first thing is the joint initiatives are to be done by the RVO and IBBI and industry. All the three should collaborate for joint initiatives, and then next thing is educational enhancement. So, sir, it is important to strengthen valuation, education, and research in our country. And next thing is where we are lacking, that is global integrations. We should prepare our valuation standards which are aligning with the international valuation standard and the regulatory alliances. So, continuously improving the governance framework will improve the registered values work in our country. So the regulatory framework for registered values of India has made significant stride since its inception, transforming valuation from an unregulated activity to a structured profession with clear standards, qualifications, and oversight mechanisms. This format has enhanced the credibility and reliability of valuations, benefiting the broader financial ecosystem and supporting sound economic decision making. Going forward, all stakeholders must collaborate to address the emerging challenges and opportunities. Regulatory bodies should continue refining standards and oversight mechanisms. Educational institutions must strengthen valuation curriculum, and practitioners should embrace continuous learning and technological advancement while upholding the ethical standards. So this is all from my side in this video. Thank you and have a nice day.